help us break down some of these markets, let's bring in our first guest, and that's going to be Kevin Green. He is senior market correspondent here across the network. KG, happy New Year's Eve to you. A little bit of weakness here today. It's been consolidating here. We haven't had big losses over the last few sessions, but once again, weaker going into the end of the year.
Yeah, a lot lighter volume as well, so you are seeing a little bit more of a defensive trade, and that technology trade also has been kind of lagging here, Tom, and that's also putting a little bit of pressure to the downside. And unfortunately, it looks like, we do have 2 more days of this Santa Claus rally potentially here, but we'd actually have to have a pretty aggressive move to the upside in order to really call this the Santa Claus rally. But we are seeing a little bit of pressure, a little bit more rotation in the market, and volatility still actually relatively low, sitting at around 14.7 right now. And this is one of those issues where we kind of talked about this about a week and a half ago, Tom, where volatility getting too cheap. Obviously, there's a lot of complacency in the market, but this market has really been driven by high implied volatility, or relatively high implied volatility, and then that IV really then crushes, leading to equity gains. That's just not the environment that we are in right now. And I think we're kind of setting up for the first week or 2 weeks, maybe seeing a little bit more consolidation here, maybe going back and testing the 20-day moving average on the S&P 500, maybe even the 50-day. Those two are not too far away from each other. Maybe going back, retesting, seeing if some buyers want to step in, and then trying to move forward. If you're looking at the performance for January, I would say it's a little bit mixed, but on the latter half of January, it's a little bit more bullish than bearish. And I think that we probably will see kind of that peak inflection point for volatility leading up to the January leap expiration, which obviously will probably cause a lot of volume here. So yes, we are seeing a little bit of rotation. The losses aren't that big, but once again, we don't really have that much of a catalyst to really move us higher in the manner that I think a lot of individuals expected, a week ago, 2 weeks ago.
Yeah, solid gain so far for the S&P 500, up over 17% in 2025. But this comes on the back of a couple of years of over 20% outsized gains. So this is kind of a muted response. The NASDAQ still up about 21% so far this year, Dow up about 13%. So we've had some solid gains, but you mentioned some of the weakness that we've seen, and probably what's not leading us to the upside is that fall from recent all-time highs in some of these Mag 7 names. KG, all their charts set up, over the last 3-4 weeks, we've seen some weakness in this sector. Is that what's going to take us to that next level going into January? We've got earnings season kicking off in about 2.5 weeks also. Is that going to be the catalyst that the market needs to kind of reset itself? Is that we need strength from those market leaders, and that's the Mag 7.
Yeah, it would make it a lot easier. I would also kind of say a lot of those charts are consolidating at this point. Nvidia is a really good example of that. Over the last 2.5, 3 weeks, we've seen this range between around 170 at the lows to around 180, 185 or so at those highs. And it has broken out of a bearish formation, but it's still consolidating, and you're looking for some buyers to really step in and try to break this one higher. I think that would be obviously the bigger catalyst for this market. And from a market cap weighted standpoint, it makes it a lot easier. If you can have consumer discretionary, information technology, and communication services push us higher here, it makes it easier for us to make new all-time highs. But the broadening trade is also something not to fear. It just makes it a little bit more difficult. You got to be a little bit more of a stock picker in order to gather some alpha within this market. But I would agree with you. I think a lot of these stocks have also been extended pretty aggressively this year, and I think you are seeing maybe the risk appetite when it comes to a lot of these themes for the AI trade from the mega cap names starting to wane here a tad bit, maybe a little bit more concerned when it comes to the credit markets and the CDS markets, if you will, and you're looking at other opportunities that could still benefit from the AI trade. And I think the memory names are a perfect example of this over the last 3 months or so, where they have aggressively moved to the upside. We also have industrials doing the same in some fashion and manner, and even the power generation companies that have been kind of gyrating here, but there's still a lot of opportunity that is there. So I would agree with you, maybe a consolidation, maybe a little bit of a pullback, but maybe over the course of Q1, buyers start to step in, we get through earnings season, and this does kind of lead us to newer all-time highs.
Yeah, you mentioned that earnings season kicking off that second week of January. Expectations are elevated because we've had a couple of solid quarters of earnings growth that have beaten expectations, helped support these gains in the equity market. We'll see if that continues. One of the stocks that's actually moving higher today, even though the market's down, is Nvidia. It's up nearly 40% so far in 2025, even though it's pulled back about 11% from those recent all-time highs. There was a Reuters report here, KG, scrambling to meet strong demand for their H200 chip. I'm still wondering, scratching my head a little bit, because I know the Chinese government kind of pushing back against companies buying Nvidia chips. They came out with that story yesterday that they want to continue to ramp up internalization of technologies moving forward. What's your take here? Because Nvidia looks like it's ready to move higher.
It's trying to, Tom. I mean, when it cracks that 190 level, it just has not been able to sustain that on an intraday basis. So I think that's going to be a key watch for today. And yes, you are seeing this report. And if the report is true, and we do see these purchases coming through, that could be over 2 million NVIDIA H200 chips that could be potentially up for grabs in 2026 in the China market. Now, I want to put a little bit of context here just to make sure that everybody kind of understands the magnitude of this particular report and how it could actually impact NVIDIA's earnings here, especially top line growth. Right now, it's being reported that Nvidia has around 700,000 H200 chips. If they are going to see the difference between that 2 million versus what they have in inventory here, Tom, each one of these chips cost around $27,000. So you're talking about around a $35.1 billion impact on revenue here. Now, it's not going to be realized, obviously, in one quarter or even 2 quarters, but this over time could obviously drive top line growth here. And it's something that the company has not put into their projections or their guidance moving forward. So that's kind of a big deal. If you kind of compare that to Q3 revenue, it's around 60% of Q3 revenue. So this is actually a big impact here. And China has announced over the last 3 or 4 days a significant ramp up in domestic stimulus across the board in certain industries here. Let's see if they are going to allow maybe some of these imports for the larger companies within China that leverage these chips, like the Huawei's, Baidu's of the world. Even if you're kind of looking at ByteDance, things of that nature. And if that's going to be the case, I think this is actually going to be a positive story for Nvidia in 2026. Now, remember, the U.S. government's going to take around 25% of the cut for these sales here. And if we do see these sales come to fruition over the next, say, 12 months, 18 months or so, it's around $13.5 billion going to the federal government. So an interesting type of scenario that we have actually setting up here. And we'll see how the market actually responds today.
Yeah, and then there was also that report out of SCMP out of China that ByteDance planning to spend about $14 billion on NVIDIA AI chips, and that is a bump up of nearly 20% from the previous year as far as the technology build out there goes. KG, we had some stories that came out, started late yesterday on Tesla, but Elon Musk saying that, hey, he's going to ramp up production. But we've already known that because on their last earnings call, he mentioned that, hey, April is going to be that key month for cyber cab production, right?
Yeah, we just have him really confirming that the production is going to ramp up in 2026. It seems like April is going to be the kickoff of that ramp up, and we'll see how this actually impacts the market just as a whole here. And you are seeing maybe a little bit more optimism when it comes to Tesla. It's not only just selling the EV vehicles. We have seen that has been weak over the last year or so, and actually in 2025 we're going to see the second consecutive year of declining sales for these Tesla models here. But it looks like Elon is really focusing on these these cyber cab, if you will, or the robo-taxis, also looking at humanoid robots and looking for new revenue streams in order to boost top line growth and try to get to some of those big milestones that they have in his pay package. And so you are seeing a little bit of optimism to start off today's session. Now, on the back of that, we still have Michael Burry, which really kind of emerged back onto the mainstream this year, especially the latter half of this year, stating that the company's valuation is a little bit too stretched at this point in time, and then also kind of attacking a lot of these companies, not only just Tesla, but others within the AI space, saying that some of their accounting when it comes to the AI build outs and the AI revenue might be a little bit more aggressive to his liking here. So maybe a little bit bifurcation when you're looking at the outlook for this company, but the ramp up in the cyber cab could be a tailwind for this company. I would not expect it to have actually a major impact on revenue in 2026. Maybe in 2027, it does take some time to kind of ramp up production and really try to put it at scale, which is one of the harder things to do when you are an automotive company.
Yeah, his quote, ridiculously overpriced, but then he came out immediately afterwards and saying, responded to a user asking if he would bet against Tesla, saying I am not short. So this is kind of that mentality I think a lot of people in the market have, because the outsized valuation of Tesla, KG, is that, hey, you know what? Maybe it is overvalued on just based on EV sales, right? And a lot of goals that they're setting moving forward, whether it's a cybercab, whether it's humanoid robots, the Optimus, expectations there. But this is actually, I think, the mentality of a lot of traders, right? KG on Tesla is, hey, it's overvalued, but do you want to get in front of, any potential gains, because the investor base for Tesla is such a believer in this stock?
Yeah, this is a stock that can rip your face off if you try to short it for too long here. It's one of those, you got to get in and got to get out in order to try to capitalize on any type of short. And this is also a stock that, once people kind of forget about it, it's out of the headlines, it consolidates here a little bit. That's when it can aggressively move higher. That's what we have seen here. We have seen, obviously, this chart showing a very volatile year for Tesla, but they do have a lot of optimism when it comes to the future and the products that they could roll out here. Now, the adoption rate, I think, is still in question, but we have never seen Tesla actually not making one of its goals. It just, the timeline usually is a little bit longer than what the street has expected or what they even tell us here. So yeah, very hard short, and one of those type of stocks that you have to have a risk-defined strategy in order to try to capture a short position within this name, because it can run fairly aggressively very quickly as well. So a lot of optimism here. Let's see how this actually kind of rolls out. Once again, when you're looking at this pay package from Elon Musk, he's going to definitely have to drive some top-line growth, and that might also happen organically in-house with new product offerings from the company, but also looking at maybe some inorganic growth, maybe acquiring or merging certain companies like XAI and things of that nature to really try to get it to the promised land here. And I think that might be one of the key things to watch for 2026. Last but not least, if they actually did make that decision, Tom, to ramp up and try to expand the energy storage business, which is in very high demand, it's the most profitable portion of their company, but it doesn't drive that much revenue on the top line. That could also be something that gives a lot of optimism in the near term for a lot of institutional investors that are looking for maybe a near-term win that could be put at scale, and Tesla does have that ability to do so.
Yeah, speaking my language there, KG, stay in risk-defined, use the option market. If you're going to trade Tesla, it's definitely a tradable product, to say the least, on that one. And we'll continue to watch that story. A lot of goals to be set. Now, let's move over to the S&P 500. You know what, KG, even with 3 straight days of losses, we're a little bit weaker here today. The S&P 500 is still less than 1% below its record high from last Friday. What kind of levels are you looking at here for this index?
Yeah, to the upside, 69.20 is where we're seeing the majority of the calls being sold for this morning. To the downside, 68.40. A lot more put activity taking place here, Tom. And over the last 2 trading sessions, we have seen a significant amount of SPX options being traded here. A lot of premium sellers in this market. That also kind of coincides with the consolidation within this market. I think it's also important for individuals to know there is actually a pretty decent or big expiration that is taking place today for the options. This is going to be the year-end options. The JP Morgan collar is also going to expire. So a lot of options traders are going to be focusing on that, especially that 7,000 strike, which is what they currently hold right now. Let's see what the new positioning is going to be for them. And that could actually spark maybe a decent little 15, 20 minutes of options trading here in the market. That usually happens around midday, if you will. Let's say 1 p.m., 2 p.m. Eastern time.
Yeah, we'll see if anything happens as far as positioning heading into 2026 in a lot of these stocks and indices at this point. All right, great stuff. KG, appreciate that. Happy New Year to you, buddy. That's Kevin Green, Senior Markets Correspondent here, helping us break down all the stories that are happening in markets today.